And we're live.
Just tapping in. A little Happy Gilmore action for you. Somebody said they're coming out with a new Happy Gilmore this fall.
Well, Happy won't be in it because his hand got ate by alligator. What's going on, beautiful people? Jesse Von Helen to you from Frisco, Texas. And I have a few of my business partners on with me tonight. We're streaming across multiple platforms, probably about 7 platforms. We're just going to be dropping nuggets on you, some value from you, and saying what the hell is going on with the economy and traditional financial strategies, guys. We're going to talk a little bit about estate planning, life insurance, retirement planning. And I promise you, if you got questions, we probably 99.9% of the time, we're going to have answers for you. But I just want to welcome to the stage my man Alex Tabor and Mark Cassara. Where are you guys hailing to us from?
Yes, sir. Frisco, Texas in the house.
We got Prosper, Texas in the house. We're going to prosper tonight.
Prosper. Frisco, what's the weather like down there where you guys are?
Oh, it's about 75 outside right now. Beautiful, beautiful, beautiful.
How are you 3 degrees?
No hurricanes?
It's cooler over here, man. Frisco is always cooler. No hurricanes, no flood. No, you know what I've recently seen on the news? Chemical fires in these big warehouses. You see that chemical fire? Where was it? Where was the last place? It was in Kentucky or something? But there was one right here in Frisco. A pool company just went up in flames, and it was.
They shut down. Went to a shelter.
Smoke. Yeah, they had the shelter in place. Absolutely crazy.
That's right. I remember that. That was the other day, right?
Guys, just remember, weird stuff tends to happen right around the election. Really weird stuff. Watch next. Aliens are going to come invade us, and we're going to see something about UFOs in the news. Watch, guaranteed.
There was this thing going around on TikTok there for the longest time saying if you look up some telescope that there's an alien invasion coming.
Yep.
Hey guys, remember if you're streaming on Facebook, you have to go to your Facebook and change audience from friends to public.
Yeah, working on that. My Facebook's
TikTok.
lagging.
What's going on, guys? It's been 2 years since I tapped in with you guys. If you're not following me on Facebook or Instagram or YouTube, make sure you go ahead and go over there and follow me. I can't promise you I'm always going to be on TikTok. There's so many restrictions out there and shadow bans, and they just want to govern what you're saying out there. So I just want to bring the knowledge. I want to bring value. I want to bring freedom to you guys for those that are willing to listen. Same thing with you guys on Facebook, on Instagram, on YouTube. For my new audience on LinkedIn, some business professionals dropping mad bombs and bringing mad value to you guys. So other than that, I think Mark stepped away for a second. He'll be right back. But Alex, there's a lot of stuff going on in the economy right now. There's a lot of fear taking place, but it's an election year. We don't know who's going to be elected, whether it's going to be left side, right side, in the middle. None of that even matters because it's not Wall Street. It's your street that you got to take care of. It's not the White House. It's your house that you have to take care of. It's not it's not anybody else. It's you got to take care of what you can control. So let me ask you a quick question about your opinion about retirement plans. We've seen the market's down right at 1% here today. We know it's up 20% for the year, but it's still an emotional roller coaster for those people who are getting ready to retire here in the next 2 years, 3 years, 4 years, 10 years. Guys, you can take on less risk and simply you're tired of losing. It's hard to win when you're taking 2-3 steps back every few years, folks. So Alex, what is your thoughts on the emotional roller coaster ride that middle-class America has been groomed into believing is the truth, the only way, the right way?
The only way, the right way. Yeah, that's it's amazing how many people you talk to that have 401ks, and one, they either don't know how much is even in there, how to access it, who to talk to. Their HR person or whoever enrolled them into their 401k didn't tell them anything about it. All they did was say, hey, you qualify for our 401k. Sometimes it's a company match 401k. You want to retire, right? And of course, everybody says, well, yeah, I want to retire. And everybody else is doing it. So you just kind of follow the herd. And unfortunately, those sheep that are just going along with the 401k are just falling off the Grand Canyon when there's a better financial vehicle out there for them. Now, everybody knows about the Roth accounts. And there's I've even heard of some companies out there offering Roth 401ks. Well, guys, a Roth account is a step in the right direction, right? At least you're paying the taxes now. You're biting the bullet now because we know taxes are going to do what in the future? They're going to go up. They have to go up, especially if we keep funding Ukraine and all these other wars that we're getting involved in. But if taxes have to increase later on down the road, my question to you guys is, do you want to pay those taxes? If not, maybe there's a better financial tool out there. Not maybe, there is, but you just may not know about it, or you may think that it's something else, because we're going to go a little bit into that later on this evening. And I'm sure Jesse's going to touch on the subject as well. But when it comes to retirement planning, you can incorporate a certain, I'm not going to say it just yet, Coach. You can incorporate a certain strategy using a financial tool to minimize the taxes that you're going to have to pay and have access to your money sooner without paying the taxes and penalties.
Yeah, you're absolutely right. So let me ask you a question, or let me rephrase the question. What are your thoughts about people nearing retirement having to go into an emotional roller coaster?
Why
Do you think they want to be on that ride?
No, of course they don't. No one wants to be on that ride where they log in, every month, or they get their quarterly statement and they go, oh my gosh, I thought I had more money to retire. I'm going to have to work another 2, 3, 5, 10 years in order for me to even think about retiring with the way that my cost of living is nowadays. With the rise of inflation, you have to have more money in order to be able to retire and live the lifestyle that you and your family's grown accustomed to.
Hey, folks, as you're logging in, we're talking about financial strategies, guys. We're talking about retirement planning, estate planning, how to protect what's rightfully yours and take back control of your financial future. If you're following this, go ahead and let me know in the comment section what city and state you're logging in from, guys. I want to see how many states we can touch this evening. For all my TikTokers, guys, I haven't been on TikTok Live in probably about 2 years. So thank you for your support. Go ahead and make sure you're dropping comments. I want to get to know you folks. And for everybody else, so whether you're watching from Instagram, LinkedIn, YouTube, or even Facebook, guys, I just want to show you mad love and let you know that I appreciate your support. But we're here tonight to answer questions for you and provide value to you. I'm not doing this for me. I'm not doing this for anybody else. I'm doing this for you guys. So go ahead and drop your questions in the comments, and I'll make sure we address your questions. If it is answerable. Somebody said they are in Frisco, Texas. I'm in Frisco, Texas, guys. So shoot me a DM and let's link up for lunch or something. So that'd be awesome. So, well, cool. Hey, listen, here's one of my takes on the emotional roller coaster, folks. We've been sold a freaking lie. We've been sold the 40-40-40 plan. Go to school, get a job, work for 40 hours per week for 40 years for 40 freaking % retirement. And if you look at Vanguard, you look at Voya, you look at Principal, you look at Principal, you look at Empower, some of the top wealth managers in the nation that holds 401ks and IRAs, guys. I'm going to tell you, if you just Google it, what is the average balance, the average median balance of a 401k plan at 65 years old? And it's going to show you it's less than $85,000. So you're telling me the golden years, your golden years in retirement, you're going to have less than $85,000 saved up. Let me ask you a question. What type of retirement are you going to live on $85,000? The current traditional retirement system in America is a scam, it's a fraud, and you've been lied to. And I hope you understand that. It's dangerous, it's misleading, and it's a lie. And I'm telling you, If you look at the 4% rule, folks, the 4% rule, just Google it. What is the 4% rule? It's a safe withdrawal rate, meaning that if you want a 90% probability of not running out of money too soon, you can only safely withdraw from your nest egg 4% annually. If you have 100,000 in your 401k, the average balance is less than 100,000, but based on 100,000, you can only safely withdraw $4,000 per year. Are you traveling the world on $4,000 per year? Are you getting in your RV and traveling across country to see your grandbabies play sports at colleges or high schools? I don't think so, folks. The government designed the retirement system for you to always be dependent upon them. Warren Buffett says it best. He or she that controls your money controls you and the decisions that you make in your life. So I hope after tonight, you reach down and you grab a pair of boldness, of courage to say, I need to get educated. I may have not known this in the past, but I know this now. And now it's my duty and responsibility to learn this so I can educate my family, so I can give them a head start in life so they don't have to start from scratch like I did, guys. You got to be that person in your life that's going to set the tone, set the standard, raise the standard for future generations, folks. I can keep going. I'm not here to preach tonight, but I just want to let you know that it's not too late. I don't care if you're in your 60s and your 70s. Shoot, even if you're in your 90s, there's strategies out there for you to protect your wealth. And let me talk real quick. I want to shift real quick, Alex, to what the Fed just did by lowering the interest rates by 0.5%, 50 basis points. What does that mean for high yield savings account? Because everybody's been saying, I have a high yield savings account over the past 3-4 years. What do you think that means for high yield savings accounts?
Well, I mean, you're not going to experience the growth that you were participating in. I mean, high yield savings accounts, yeah, it's an alternative that you can use, but I mean, what's going to happen whenever we've got this person running for president right now that's the current VP who's wanting to tax you on unrealized capital gains?
Sure.
That's going to play a huge part in your investments and your different strategies that are out there when it comes to your retirement. The majority of people out there right now, they're not in Roth accounts. They're in traditional IRAs, traditional 401. They're going to have to pay
only 6% of America have a Roth.
Yep. And less than that have the strategy that Jesse and I are going to be discussing about tonight. Now, the 401k, the reason that Jesse is saying it's a failed strategy, and the baby boomers, sadly, which my parents are a part of that generation, the baby boomers are finding out just how much of a scam it really is. Unfortunately, the millennials, the Gen X's have been brainwashed to think that, oh, well, my grandparents did it, or my parents did it. Well, your parents were probably baby boomers. Your grandparents may have been maybe baby boomers as well. And they're finding out that, no, they don't have enough money saved up in their current retirement with their 401k alone. They're going to have to rely more on Social Security, more on the government to maintain their living status, their bills. Do you really want to rely on the government and Social Security for your retirement? If not, you need to do something else other than a 401k if that's the only thing that you're invested in, because like Jesse said, you're going to be paying those taxes later on down the road. But basically what they did, and we may touch on this later on in the live, but basically what the United States government did is they created an annuity for themselves. If you don't know what an annuity is, we may touch on that, but definitely look up. There's different types of them, but the United States government created an annuity for themselves, and you're it.
Yeah, you're absolutely right, Alex. Let me go back to high yield savings accounts. All right. So many of you have gotten into high yield savings accounts over the past three and a half years, ever since the pandemic happened in 2020. You were looking for a alternative strategy from a bank account because the banks are giving you 0.03% to 0.06%. It's not growing for you there. So everybody on TikTok and the Reels and IG that we're talking about, get you a high yield savings account. So that's what you did. Well, high yield savings accounts, the only reason that they were up. So think about this. Okay. most people put their money in certificate of deposits where they were yielding 3 to 4% over a 2 year, 5 year, 10 year, whenever they matured. And then you have something called savings bonds. Well, triple A rated savings bonds traditionally yield 3 to 4% interest per year. Well, when you get a high yield savings accounts, these banks are putting money into. They're taking 50% of it and they loaning it out in the form of credit cards, auto loans, and mortgages. They're taking the other portion of it. They're sticking it in life insurance, and then they're taking the other portion and putting it in bonds. Well, when the government increased the interest rates, the bond rate increased. Therefore, they could give you higher yields on the savings accounts. Now the interest rate is decreasing. So now the bond rate is decreasing, and these high yield savings account that you have all your money in is about to decrease as well. It's already started decreasing. So now you're going to be out there on the look of an alternative strategy from a high yield savings account because it's just not really going to be high yield any longer. It may give you 1 to 2%, which is better than your traditional savings or checking account. But you need a solid strategy to go out there and put your money in motion. It's like the ocean's current. Your money has to stay in motion for you folks. So that's where we have to really pay attention to what's taking place with the economy, the inflation rates, the interest rates, because it's going to impact you. And Alex, as you were talking about, somebody running for government is looking at taxing unrealized gains. That makes complete, like, it's BS. It's BS because why? Yeah, like how can you tax unrealized gains if the money's still there? You can't tax money that's still there. So what happens if I have 20,000 there? I go from 10,000 to 20,000. You're going to tax the 10,000, and then the market drops, and I'm back down to 5,000. I just lost money. Like I just paid for money that doesn't even exist. I don't know who came up with that, but that's bullshit and it's crazy. It's batshit crazy. So I'm sure that's just something out there that it'll never pass. I'm not gonna say it'll never. I can't put it past anything that we've been seeing here lately. But that's crazy. So
Things are getting crazy.
I don't know who this user 919-515-926-5796 keeps saying, let me get on, let me talk. Guys, I don't even know your name, bro. Right? How can you talk if I don't even know your name? Just saying. That's on TikTok. If you're following on
There's so much of them like that. I got a couple of them too on my end.
yes,
I don't know why you don't have your name on there. Were you that?
Said,
are you the
John,
Illuminati?
what we're going to talk about, John? What we're going to talk about, John? If I let you on, we got Lucian Odom. What's up, brother, man?
Real estate, though.
Candace Smith, South Mississippi.
So, how much would unrealized capital gains hurt the real estate market? That would be a game changer for those guys as well that mess around and buying and flipping and things like that. I know a lot of our clients, especially I've got some down in the Houston, Texas area, that use our strategies to get involved in real estate and acquire more real estate, creating that financial velocity that you talk about a lot, Jesse. Instead of just making their dollar work for them and just the real estate, they spread that dollar around, but they first put it in one spot. They just change one thing. Tell us what that one thing is that they make that change, Jesse.
Say it again.
They just change that one thing where their money goes first in order to get involved in real estate. That way it creates that financial velocity to where if they wanted to get involved in real estate, instead of just dumping all their money in one
share
vehicle,
my screen.
They dump it in this vehicle first, and then they can spread it out, creating that velocity they're looking for, making that dollar work for them in multiple places at the same time, instead of just in the real estate world. It's like the old car. I love that analogy that you do, Jesse, with the, hey, you got this, you want a new car, and now you got an old car and no money.
Yeah, I'm trying to see if I can get a free whiteboard.
Yeah, you should be able. I think you click present. Those of you on TikTok, you're going to miss out on this. So you'll have to actually click the link in Jesse's bio or my bio and schedule a strategy session if you want to see what we're talking about here. But Jesse's going to be sharing his screen here momentarily, his whiteboard on Facebook, YouTube, Instagram, a couple other platforms that we're broadcasting on. And we're going to lay out this strategy of financial velocity and making your dollar work for you in multiple places at the same time versus just in one spot. Because if your money stays stagnant in just one spot, like it goes back to the saying that my grandma said, you put all your eggs in one basket. What happens if you lose the basket? You just lost all your eggs too. There's a book that I recommend, and Jesse will remember this book. We read it a while back, called The Retirement Miracle. And it's a good book. I highly recommend for all you, especially if you're baby boomers or you're a Gen X. The Retirement Miracle. Look up that book.
Cool. Yeah, this John guy, I guess he's throwing shade. He said, okay, I'm out. You're good. 6 live followers. To lean, you need to hear other people. Cool. I got 6 live followers because I haven't been live on TikTok in 2 years, bro. So you got to be blessed with my appearance tonight. Okay. But anyway, for everybody on every other platform, you can see my whiteboard. Okay. So I'm going to quickly explain to you what we teach our clients. Okay. These are alternative strategies. I want you to look at this with a receptive mind. Okay. Be a sponge right now, not a judgment mind, not a closed mind, but a receptive mind, being open to hearing, to learning. And then after this, you can go and formulate your own thoughts and opinions about it, or you can reach out to us and learn a little bit more. So listen, you have your bank right here. Don't judge me by my handwriting. This is going to act as a bank. Okay. The bank operates on 3 principles. The first banking principle is cash flow. Here, let me make this thing a little bit thinner. Can I make that thinner?
Too girthy, Jesse.
It's too girthy. That's transparency. Oh, the weight. I just pulled the weight down. Cool. Oh, there we go. So operates on cash flow, leverage, and then finally they create velocity. Now, financial velocity just means how many times can I get my money working for me simultaneously? So have you ever heard the term leverage other people's money? if you're in the real estate industry or business, you probably heard that. Well, in this situation, we are the other people. So our cash flow is the bank's money. So within microseconds of our cash flow hitting the bank, your direct deposits would, excuse me, when you get paid, they take 50% of this and they loan it out in the form of credit cards, auto loans, and mortgages. Now, I'm pretty sure they're charging a certain percentage for these, and they're charging anywhere between 10 and 29% interest. So we're just going to average 15% interest, that the bank's profiting 15% interest. Now, what is your current traditional bank account paying you? I bet it's less than 1%, because across the nation is 0.03% to 0.06%. So if the bank's earning 15% and they're paying you 1%, the bank has a positive arbitrage of 14% profit. They put your money to work for them. They created velocity. We call this velocity banking. So the other 50% of our money, hold on. The other 50% of our money, come on, draw. There we go. The other 50% of our money, they stick in something called tier 1 assets, where they're earning an additional 6 to 8% interest. They're still giving you the 1% breadcrumbs, and the 6 to 8% interest is called cash value life insurance.
You just made somebody's head explode right now.
Bank-owned life insurance. Life insurance companies, banks are the number one owners of life insurance.
Yep.
But the bank's telling you to stick your money in the bank. Well, why don't the banks hold certificate of deposits? Why don't the banks hold money market accounts? Let me continue blowing your mind, guys. Let me continue blowing your mind. I'm going to stop sharing my screen real quick. I'm going to open up another screen. And remember, most people, they have to see it in order to believe it. So I'm just going to show you.
Oh, I know where you're
go back
going.
here.
Guys, let me know on TikTok here. How did that blow your mind when Jesse just dropped the bomb on you guys? Cash value life insurance. Did something click?
As you're watching this, ask questions. Ask questions. Let me know your thoughts. I already know this information. I don't need to share it. I'm sharing it for you. Ask questions, guys. Okay. So what you're learning right here, once my screen shares, you're going to be looking at the top 100 banking institutions by the amount of life insurance they hold. So if you're looking at this, you're going to see Bank of America owns $24 billion worth of cash value life insurance. Wells Fargo, $18.3 billion.
That's billion with a B, right?
JP Morgan Chase, yep, with a big old capital B. JP Morgan Chase, $12 billion. Now, let's go to a website. It's a public website. Search it. It's called bowleycoley.com. What you're going to do is you're going to hover over insurance services, then hover over bank-owned life insurance, and then go to Bowley Facts and Figures. And now what you're going to be looking at, you're going to look, as of June 30th, 2023, there's 3,153 banks currently nationwide with assets between 100 million and 1 billion currently own Bowley, for a total of $184.6 billion. Bank-owned life insurance.
Now, guys,
if you're out there walking around with car insurance and phone insurance, but no life insurance,
it's crazy.
Because Dave Ramsey told you to go get out of debt and not get life insurance. You don't need life insurance. That's a scam. Get out of here with that.
He's on the buy term.
Wealthy's doing it. If the banks are doing it, why aren't you doing it?
Exactly.
Success leaves clues, folks.
Disclaimer, but let me continue. Guys, don't go to bowleycoley.com and try to get a policy there, though. I've actually had clients tell me they've done that, and it's like, no, that's just telling you the facts and figures. got to go to a life insurance agent, but go to one that actually knows what they're doing, so they don't stick you in a policy that you don't need or that's improperly structured.
That's right. Well, let me blow your mind even more, because many of you out here saying, "Oh, it's free money. It's free money. I get my 401k match. It's free money." Be quiet. It's a lie. It's a lie.
Piss some people off tonight.
It's a lie. It's a lie. And if you're a financial advisor out there putting people in those 401ks, shame on you. Shame on you. So let's keep going. Anytime I'm on a .gov website, it's going to be slow. So I'm going straight to the Security and Exchange Commission website. Security and Exchange Commission website, sec.gov. Okay. Man, oh man. So I'm the technical guy here at the company, and I like to dissect. I don't like people just to tell me. I'm going to go research it. I'm going to go do my own due diligence. So I said, what are these wealthy people? What are the CEOs, the executive, the C-suites getting paid at these big billion-dollar companies? So I go and I dissect their proxy reports. If they're a publicly traded company, you have access to their financial statements and their proxy reports. So this right here, what you're looking at right now, is you're looking at the proxy report for General Electric. Anybody familiar with General Electric? Hopefully so. You probably have a refrigerator or a stove or a microwave or maybe a washer and dryer from GE. Okay.
I know you got some light bulbs in your house.
Probably some light bulbs. Okay. Now it's going to be a little slow, folks. So ask questions. Ask questions while it's loading. It's a .gov website, and they don't like me showing this. I call it the Illuminati every time. Okay.
That's why they keep sending me Facebook requests.
Yeah, I got over 30 fake accounts, and it's crazy. But let's keep doing this. Oh, no. It might have something to do with me having 45 tabs open, too. I don't know. It's one of them.
Devices. That doesn't help.
And streaming. So check this out, guys. I'm going to highlight as I talk. So if you look on the left-hand side, you're going to see Emlet. That's the CEO. Bornstein, Chief Financial Officer. Comstock, Chief Operations Officer. Joyce, Rice, and Shireen, that's some of the board members. Look over here in this column right here. The very first column, you're going to see life insurance premiums. General Electric, inside of these C-suite executive life insurance policies, they're saving $445,000 per year, $92,000 per year, $134,000 per year, and so forth. You get the game, right? That's interesting. But what's even more interesting, folks, is this retirement savings plan. This is their 401k, and they're only putting $9,275 per year inside of their 401k. Well, gee, Alex, I wonder what the $92.75 actually is. That's the company's match. So we got to say, hey, that's interesting. What is the company's match? Is it free money to us? Hell no, it's not free money to us. So every dollar a company matches you into your 401k, the company takes it as an immediate tax deduction that tax year.
Yep.
You, my friend, still have to pay taxes on it when you go to retire. Let me know in the comments, do you feel taxes are going up in the future or down in the future? So all the company did is shift the income tax liability away from them, and they put it on you. You're liable for that now. That's a win for the company. That's not a win for you. Now, check this out. Every dollar the company puts inside the C-suite executive's life insurance policy, guess what? It's also tax deductible to the company. But since it's life insurance leveraging 3 tax codes, Internal Revenue Code 72E says you can grow your money in income tax-free. Section 7702 says you can access your money income tax-free. And Section 101A says when you pass away, it transfers to your beneficiaries income tax-free. See, many of you have only been taught Section 101A. It leaves some money to your family when you pass away. You're right. But there's 2 other tax codes that can benefit you if you're willing to listen. Okay? Now, this isn't term life insurance. This isn't whole life for all my whole life gurus out there. This isn't whole life insurance. This is something called universal life insurance. Thank you. Case closed.
Boom.
So if the banks are doing it, if the wealthy's doing it, why aren't you doing it? Why are you still using a bank account and a 401k, my friends?
You've been brainwashed.
I'm sorry.
Hey, there's this indoctrination camp. I mean, there's this public school system that that teaches us that's what we're supposed to do. We're supposed to go out, make good grades, get in debt with a college, college student loan, go through college, make good grades so you can get better pay and go into a job to work your way up the corporate ladder while stuffing your money into a 401k to save for retirement that's never going to happen.
Hey guys, let me ask you a question. How many of you currently have a 401k right now? Let me know in the comments. How many of you currently have a 401k? I'm interested to see.
You know they all do.
Okay, somebody said me. Well, let me ask you a better question. It's at the bottom of the screen. How satisfied are you with how 2024 is turning out for you financially so far? How satisfied are you? You're about to blink and it's going to be 2025. Are you financially satisfied with how 2024 is turning out for you financially?
Somebody said negative 1,000,000%. Or
Negative 1,000,000%.
oh, negative 100,000%.
That's it.
Yeah.
Let's see, guys. And if you're not satisfied with how 2024 has turned out for you so far financially, what are you going to do to make sure the fourth quarter, October, November, December, isn't the repeat of the first 3 quarters? Do you have a coach in your life? Do you have a mentor? Do you have a plan? Do you have a system? Do you have the opportunity? If you said yes, much respect. Make sure it's not just about education; it's more about the application. You actually put some elbow grease behind that effort. If you don't have a plan and you're serious, I'd be willing. I'm sure Alex would be willing
100%.
to at least have a conversation with you. Okay.
Now,
Now,
the cool thing
let me
about
ask
it
you a
is
better
we're not
question.
financial advisors, guys. We're not financial advisors. We don't charge you for our time to sit with you. We get paid from the big billion-dollar insurance carriers to make sure you guys are properly educated and know what these things do and how they're supposed to be structured and work. Go ahead, Coach.
How long we been on here?
Not long. We can go all night. Hey.
We can go all night. I'm not going to go all night. I like my time. We're not getting enough questions.
We're here for
just
you
so
guys.
you guys know, for anybody that's willing, that's looking into getting life insurance, anybody that has gotten life insurance, I don't go live often, but I'm the number one producer in the industry when it comes to advanced markets. Okay.
Hold on. He's fixing his camera right now. Let me edify this gentleman because some of you. You don't know who exactly Jesse Moon really is. Jesse Moon is one of the most highly sought after individuals when it comes to these types of strategies, utilizing them in retirement strategies or IBCs. IBCs are infinite banking concepts. If you're wanting to do that, one of those two things, either retire tax-free, penalty-free, maximizing your money while minimizing your taxes and your losses, and you're wanting to become, or you're wanting to become your own bank, this is the gentleman. This is the gentleman that taught me everything that I know. That's who is on this call right now. He's the most highly sought after gentleman when it comes to this across the nation.
Appreciate that, Alex. I appreciate that. Hey, hey, listen, guys. We've dropped a lot of information for you guys tonight. Um, we'll probably replay this. I think it lets you go, like the studio lets you replay this on loop. So we'll put it back live probably tomorrow if you want to capture that, the illustration that I gave you about the three banking principles. If you can learn those three banking principles and actually implement those, it's going to change your financial future. It's going to get you out of that rat race, and you're going to stop spinning your wheels. What were we going to say, Alex?
I do have a gentleman that did ask a question here, and he asked if we could talk a little bit about how personal health can affect the rates, or etc. Examples. So if you're looking for IULs, it's going to be a little bit. Obviously, you still have to go through underwriting. So underwriting is going to pull 3 reports. Okay, they're going to pull a medical report, a prescription report, and a driving history report. Obviously, they're going to be weighing their risks, right? Their life insurance is all about risks. So it's not going to affect an IUL as much as it would a term policy. Remember, you have to switch your mindset when you're looking at these different strategies. Term policies is just a death benefit. That's all it is. With these IULs, you're not getting the policy for a death benefit. Obviously, it has one, but you're getting your money working for you inside one of these policies, and you're accessing it tax-free, penalty-free. But Jesse, can you go a little bit more in detail maybe about how personal health can affect the rates or some of these policies with IULs?
That Nick guy, his name looks familiar. I don't know if I met with him before or not. Nick Singh Sigali. I think I know who that is.
Is that Sicilian?
Are
you in the mob, Nick?
He said, yes, sir. Yes, sir. Yeah, I thought that was a familiar name. Hey, listen, obviously, when it comes to life insurance, it's all about mortality. It's all about, again on Friday. That's right. We're meeting again on Friday. We're supposed to meet on Wednesday. We moved it to Friday. Good stuff. So it's all about mortality rate, guys. Remember, these life insurance, all they're doing is weighing the risk. So as Alex was spot on when he said they're going to pull 3 reports. They're going to pull your, first and foremost, your motor vehicle report. Make sure you don't have a long history of DUIs, reckless drive-ins. Obviously, that's risky behavior, right? Some red flags. They're going to pull your prescription medication report, making sure that everything on the application is in fact true and factual, that you're not intentionally leaving something off. Then they're going to pull your MIB, your Medical Information Bureau, making sure you're not going to pass away tomorrow. So once they run the risk, they're either going to say, yes, we're willing to accept the risk, or no, we're not. If for some reason you do have a pre-existing medical condition, then depending on the severity of it, is it controlled, is it non-controlled, and they may increase your rate, which would increase the cost of insurance. Cost of insurance over time is right at 1%. And the longer you have it, the cost of insurance actually, if structured properly, it's actually going to be less than 1% over time average. So that's why it's vital that you guys get with somebody who knows what the heck they're talking about and knows how to properly structure these policies. I cannot tell you how many people that come to me and say, hey, Jesse, I saw your video on IULs 2 years ago, and I went and got an IUL with somebody else. I'm like, why would you do that? And then now I'm having to refix what was broken by the agent that didn't have enough knowledge or was doing it for whatever reason. So get with somebody who knows what they're doing. I'm going to tell you, there's 108,000 active licensed agents in the industry. Less than 4 to 5% of them even know what they're doing.
Right.
So only 4 to 5% actually know what they're doing. Just because you have a license doesn't mean you're a specialist of advanced markets. Okay. So that's the first thing, guys. I have a video on my YouTube channel, 21 things to ask your life insurance agent or financial advisor. And write down those 20 questions. If they can't answer every one of those questions without stuttering or saying, I have to find that information, run as far and as fast as possible away from that person and go to somebody who can answer those questions. Okay. Just want to say, somebody said, Candace Smith said, I really do not even know where to start. I'm planning late in life, but I'm ready. Candace, start by sending whoever's feed you're actually looking from, whether it's mine or Alex's or somebody else, contact me or Alex. Reach out to us, shoot us a message and say, hey, where do I start? We'll get with you. We'll sit on a free strategy session with you. And first and foremost, we'll educate you. It's not about selling you anything. It's about educating you first. You can't do anything without the proper knowledge, right? And I promise you, once you get the proper knowledge, then you'll feel a little more confident in your decisions. Hopefully that helps. Matthew Shelley says, how challenging or easy is it to have my current life insurance policy restructured? Will your team take a look at doing this? Hey, listen, if you got life insurance already, me and my team, we will review that thing.
Yep.
Because you deserve to know how it works. You deserve to know exactly what you got. I cannot tell you how many policies we look at, and I'm like, do you know what company it is? They're like, I don't know what company. How much coverage do you have? I don't know how much coverage I have. How do you not know that? Like, life insurance is an asset. If you go to purchase a property, if you go to purchase a home, they ask you in your asset column, how much life insurance do you have? Because that life insurance can be used as collateral in case you lose your job and can't pay your mortgage. You
Yep.
can collateralize your life insurance to the the loan department. Guys, you have to know these things. So yes, we will review your policy. And if we can get you more insurance coverage for the same cost, or we can get you the same coverage for less, hopefully that's a conversation you're willing to have with us to replace whatever you currently have. Because listen, guys, if your current financial advisor hasn't told you about these strategies, Alex, you want to go and tell them? It's either one of two things.
They either didn't know or they didn't care enough to tell you. It's going to be one of those two. I would probably call your financial advisor tomorrow and ask which one of those it is. Now, Matthew, you said life insurance, can it be restructured? Okay. If it's a term policy, sometimes it can be converted into a permanent policy. But it all depends on what you're trying to ultimately do with these things. There's benefits in whole life. There's benefits in IUL. There's benefits in just having a term policy. Some people, they're not ready for that IUL or permanent policy step yet. There's a product for everybody out there. But first and foremost, let me ask you this. If you are looking for life insurance, period, my question to you would be the same question that was asked to me before. If you were in the hospital laying on that hospital bed and the doctor was coming in at any moment and you didn't know if he was going to have good news or bad news, how much coverage would you want to have if it was worst case scenario? Ultimately, a term policy is for the most amount of death benefit protection for the least amount of cost. An IUL is not for a death benefit. It's a different strategy. It's for getting your money growing and working for you, tax-free, penalty-free at any age.
I appreciate that, Alex. Nick, he says, here, let me share this on the screen. He says, so this product protects my money. Will it also grow my money and put me in a better place for retirement? This is an alternative strategy to a 401k. Whatever you're allocating to the 401k, take a portion of it or all of it if you choose and just reallocate it to a better place. Okay. It's going to give you the growth of the market. You have a 0% floor. So when the market drops, like today, the market dropped 1%, you wouldn't have lost anything inside of a life insurance, cash value life insurance policy. But when the market bounces up, you're going to capture all the gains. Okay. It's called uninterrupted compound interest. It has living benefits, critical, chronic, terminal illness, as heart attacks, strokes, cancers, long-term care. So if anything throughout your life, if you're ever diagnosed with a critical, chronic, terminal illness, you can use the death benefit while you're still living. You don't have to liquidate your assets or exhaust your retirement too soon. And then if you were to pass away too soon, guess what? It blossoms into a death benefit that transfers to your family, income tax-free. It's the Swiss Army knife of the financial industry. But you haven't been taught this. And we've been taught to think, act, and feel a certain way towards things our school system or financial advisor didn't tell us. So therefore, we mentioned life insurance, barriers automatically go up. And we're like, I don't need life insurance. I'm good. Because you think it's about death, but the wealthy know life insurance is about living. That's why it's called life insurance and not death insurance. Okay. So as long as you guys are willing to learn, we're willing to educate. Okay, guys. I definitely, Kai, I definitely appreciate that. But with that being said, guys, I'm going to go ahead and hop off. Alex, I don't know if you're going to stay on, but I'm going to go ahead and hop off, guys. If you want to learn a little bit more, just reach out to one of us, schedule a free strategy session. Make sure you're following this account. If you're not following this account yet, we have a fourth quarter push. We just broke some records in the third quarter. The third quarter. We're going to break those records, our own records again in the fourth quarter. And we're setting up 2025 to go out there and create a tidal wave across the nation. And we're looking for people who are armed and dangerous. I'm just playing. Here's what I'm talking about. We're looking for people that want to become somebody. We're looking for people that want to rise up and be vocal. We're looking for people that want to fight for their families, fight for their futures, and fight for future generations, my friends. And what I mean by that is most people don't have a spending problem. They just got an income problem. You need to make more money. So the Legacy Army Financial Group, we're looking for people that want to be in the arena of life. We're looking for people that want to be led and coached, because we need distribution. We don't have enough agents to go and educate people on these advanced alternative retirement strategies. And we definitely don't have enough people to be part of our legacy estate planning team, guys. Because if you don't have a trust, you're going through probate. I just want to let you know that if you do not have a trust, you're going to go through probate, and you need a trust in your life. We'll talk about that next live. Okay. But with that being said, reach out to us if you want to get educated, friends. Yep. Thank you. Thank you, everybody. Good night. God bless.